Hello friends, welcome back. In this quick demo, we are describing how the angular momentum is describing the shape of the pivots for a given day. It has to be combined with the right location. Now this tool, as you can see here, has three parts to it. One is the starting spot pivot where the beams will start from, and you can see the second one is right here, which is the next pivot. This is 5-minute chart, and this is the second pivot. So A, B, and C. So this range is now being projected by an offset. So there are so many pivots. How do you know which one to use? So the basic starting point is look at the time window at the bottom, and we do a numerical compression of this date. There's a lot of complicated stuff which goes on behind the scene in the market. If you are in tune with the natural phenomena and the natural flow, it is pretty straightforward. So time to price, price to time, time to time, price to price. Mostly folks do price to price. So here we are. If I do a numerical compression, which means add all these digits together, this comes down to 2. So I'm looking at a strong pivot at 2. This is where the pivot is. Now this is the starting pivot point as the location where we will beam from. And this is dynamic, as I can show you right now. So we took this, we sliced it and projected the beams. We got where market is going to vibrate, right? Okay, so this happened. So this ABC has to happen first. This ABC has a lot of structure. If you freeze one side of the equation, let's say we freeze the time, which means we create a bar structure which has no time component. It reveals a different nature of the market. And that is the reason why Rankos became popular. Now, if you want to make your own custom bar, let's say Fibonacci bar, let's say you like 1.62, 1.618 extensions, you can create a bar with that embedded structure. So instead of doing a 5-minute bar, you do 1.618 Ranko bar, for example, or you do the pi 3.14 bar structure. So what you have done is you have created a static nature of 4 dimensions, and that becomes a constant, and then everything else gets expressed. So that is one of the key sentiment I wanted to share for your experiments. You can move forward with that logic, experiment with that. Freeze one equation, a1. Think about, you have a y which has ax1 plus, let's just do it, right? If you have to find the coefficients, a1x1 plus a2x2, this is a linear correlation, so let's make it non-linear also, right? Whatever it might be, or let's say, because market is not linear, let's say we make e raised to power x minus x squared by 2. And let's say this is price, this is time, and this is volume. So if you freeze this out into, let's say, a bar of 1.618 or bar of 3.14 or square root of 2 or square root of 5, right? All those things, if you make this component static, which we can assume is price, then these becomes easy to solve, which means I can find and time the market where the turns are expected. All right, so this is just a quick concept discussion. Now if I just want to move to the next pivot, now this is A, I'm freezing that because of this numerical compression. So we have to freeze one equation variable, and this is frozen. So now we are going to move this, and you can see how market is just telling where it wants to be. Now as a trader, you have to go to 1 hour chart and see who is in control of these swings, and this is where you can enter very effectively. All right, now let's go and just talk about this. Since we mentioned Ranko, since we mentioned time, here we have automated timer, as you can see, plotted on the top. And I think if you have seen the previous videos in level 2, when these two things come together, if multiple vibration energies come together, we're expecting a turn. So this oscillator is telling us which side of the market is balanced or imbalanced. Then we wait for, okay, this is 15-minute chart. Since you guys are in a tick trading phenomena, we just want to make sure that the energy is going to align up. So this energy, I'm looking at the endpoints, beginning and endpoints and overlaps. That's it. And these are going to get plotted over and over as long as you live on Earth. So there we go, right? So this is using a logic of the fourth dimension energy superimposed on price and time and volume. So this has nothing to do with the price or volume or instrument. This is a natural law applied on top of the market vibration on ES here. And it is using its own natural square of this instrument to make the dynamic nature. So here beginning and end. Now it will be off by a bar because the way we print not on pixels, but we print end of the bars. It was telling to go short here, long here, long here, short here, long here, short here, and then what we do is we wait for the energy to pile up and blast for your 6, 7, 8. These are 9 point separated energies in price, and this again natural laws, nothing to do with specific price. We just bind these energy with the square of the market in time and price. So that is all we wanted to talk about that. Going back with the same discussion, now these are the virtual Ranko bars plotted here on a 3-minute chart where you would like to scalp. So the direction is picked by 15-minute. I will take shorts only, right? I'm looking for longs now. I'm looking for shorts now. So once we have, let's pick a zone and we can dictate ourselves. Now remember, we always keep an eye on 1 hour and Sunday open for a reason, because we know people who have taken the stage 1 level 1 course, they know exactly who is in control, what's going on, where the market makers will come. They know hours and days in advance, not after the print of the footprint, which is when the transactions have taken place. You have to understand, the big players don't show up one day and say, okay, I will short here. They have a plan. And you can know that plan is the key to understanding what you will do when something happens, right? So this is a DNA structure here. So short was projected from all sides. So now let's see, how do we squeeze the ideas of Ranko's here at 2 o'clock. It happened. Or we can do the morning, that's fine, 9 o'clock, right? So we were saying, okay, market is projected to go short. We have two energies, beginning of this small vertical burst, sorry, horizontal burst, and end of this and beginning of this. This is where energy is piling up, and this is also there. 3 of the bars, beginning and end, are colliding. So this big move is coming. So this is 3-minute chart. So if you are interested in taking Ranko, because Rankos are designed for trading, giving us the trend, right? So use that as a trend, and that makes more sense. So at this bar, Ranko, at close of this bar, said, hey, this seems like we have met the Ranko ATR based condition, and it is plotting. Now these are, if you look at this, 6 points separated. These are 9 points separated. These are 29 points separated. Higher the time frame, bigger swings we can accomplish. So here it gave us the idea. This is also giving us the idea that short is to be initiated. This bar came, gave us a chance. Now if you see this one, this Ranko was tested to the tick. Only when all the things in the bias has been dynamically detected. And you can see here on the left bottom on the second chart right here that this is a right bias based on this intraday trading system, right? Things will never change. This is for next 100 years, nothing will change because it is fine-tuned to the nature and the natural laws applied on ES. Okay. So that is, I think, this was one of those areas where you can take risk, right? And then we have this again lines coming in. They all jumping. You can see separated by 6 points. 3, 6, 9. This is 6. This is 9. This is higher dimension frequency. So this was worth risk and reward. Because everything was aligning up to that frequency. Came down, gave us a retest opportunity when we are going short. And you can see the pressure is now, this is, the move is on the 15-minute chart. You can see move is on, move is on, move is on. And let's say you missed it, this one. The second option is let it break again and construct a new zone. And you see a big bar like this and the Ranko, this is also, again, you need to understand how the big bars are played, and this is where it was a good shot again. And then it kept going on. This is again sideways action, took it down, came back to the tick to retest this Ranko level. Again, it only works in the direction of your analysis. These are entry areas. And this is telling you if you caught this, you stay short, right? And market will always go from sideways to chop to sideways, right? To trend. Sideways chop to trend. Trends to sideways. This is how it rotates, as you guys know. But we know these levels where the rotations will be, so we are cautious about it. We know those ways to trade. So let's say whatever reason we decide, okay, it's time to go long here. And I think our indicator is telling us I should be looking for long bias. Long bias is printed here on the Ranko context. On the Ranko context formula, it is printed right here. Okay. What happens? Trend is changing. Going to Ranko, it comes back to retest it to the tick. The context was set up here. And we're looking at the energy. 1, 2, and within a bar at 3. There are a couple of energies, endpoints, and this beginning point, and then this. So they are kind of overlapping within a bar context. There are 4 things happening, beginning and end overlapping. Energy is unleashing. It's going to go in the long direction, and this is where it shows this intention. 1 bar rejection. If you open the footprint chart, you will see delta is flipping in a different direction. So I just wanted to run through this, right? So now at this point, this is recent day activity, which is Friday. So I flipped on the other chart, and on this day frequency is 3. So 3, 6, 9. 24 is also 6. whereas midnight is 24 is 2 plus 4 is 6, right? 369. So when this happens, 369, we can use all 369 numbers. So I put a midnight, I put a 3 pivot, and I put a 6 pivot, 369. And this reveals the structure, and this is where we are looking at taking long and short, right? So this is a long area because I have no indicators on this, but you got the idea. So this is how we should be looking at working at this. Now again, the short was projected right here. Short is coming. Short is coming. Now I'm looking at my beginning and end point. So this is end, beginning and end. So at this point I'm thinking energy is going to be unleashed and my location is right and the direction is set up based on this balance imbalance indicator, which you should have seen in the system already by now. So this happens. This is printed, came back to retest it. This time maybe you took one and you were hoping for it'll go down. So let's say you got stopped out. You took a short here, it came down, give you a retest, it went down a little bit, few points, maybe you scalped it, and let's say if you were a great trader, you probably took some profit, took some loss, and then probably net even. Then it went up. The bar is still printing red. It went to the beginning of the previous bar range. See this box here. So these boxes need to be tracked. This is what it is doing. This is what it is saying. The context was going short. You attempted one time. Market is resetting itself. And there we go. And we took a short. Now this is where the delta, you'd have multiple screens, comes into picture. Is there a divergence between delta and the value? The 2-3 part pattern. We can look into those as well. So let's cover that as well since we are talking about it. So let's discuss the time window where we are. Hopefully they are all running on the same time at around 2 o'clock, right? 13:45, and let's look at this time frame, 1:30 to 2, and see where we are at. So go to multi-chart because this is free. And this is a 30-minute chart. And this is a chart which is like easy language based, not .NET based, which has a lot more signals automatically printed. But here we are, as you can see. If you look at what happened inside the bar, we are now at this same this time frame when we're gonna market is saying it's gonna go short. So let's study this. So this value is being printed, right? Value went higher high, but look at the delta. Delta means the total net. This is footprint chart. Delta is bid minus ask, the sell side and the buy side, which was aggressive, and who is printing what. So buyers were very aggressive here, right? They're hitting the ask and lifting the offers here, right? So I'm aggressively going and hitting. Seller want to sell here, so I'll take it. I'll take it. I'm buying the higher prices at this point, right? So I'm lifting it. So sellers are happy. They say, okay, come and get me. If you want to buy, I'm selling at this. This guy wants it really bad. They're all wanting this really bad. They went up to the higher prices and bought at the higher prices. But look at the value. What has happened inside this 30-minute bar? You can look into 1 minute, 7 minutes, go deeper into this, which is fine. But so the pattern, what it is showing us is, look at this delta. Even though they went up aggressively, but in this bar and compared to this bar, it has lost its power. That means wherever they're trying to go, and there's a lot of discussion around it, what happens, what doesn't happen. So, but you have to look into the context of a little bit as well. So here, this is the delta bar which took all this values, value area, this whole value was crushed. It'll come back to retest it. And which point it will retest it is if you see an overlapping values of the bar. That's the pattern, okay? So here, the two bar which are coming very close to this, so the market came down here, it will retest it. It went back to the seller where there was a seller right there to the tick. To the tick means quite close, right? But these two boxes right here, this is the retest level for you because market was broken. We saw a seller, we saw a delta which has uptrend. This one crushed it and was a pretty big bar. It came down. Now we can see much more clearly if I go to 5 minutes. This is 30 minutes and 5 minutes. What we're looking for is the value to be jammed at one point. So you have to look inside the bar what has happened. So maybe let me do that. So this is the area which we will analyze on a lower time frame. Let me just mark it here like this. We'll come back here. So here we are. If you had seen previous videos, how we like to see the value jammed I talked about, right? Let me see this one also. One second, fix that. All right, so this is just a delta inside the bar. Footprint is the real transaction. Footprint, just like the English word, footprint is only visible when somebody has printed the impression of the foot, right? That means in our trading, that is the impression of the trades. That means these are the actually executed trades. So it is after the fact, not projected. So we have projections and then we're looking for evidence. And now this is the evidence. If the value has been moved and jammed to the top of the bar, remember the T, we talked about T and inverted T. This is the T into the levels, into the area which I talked about, the zone I created, right? This is a value based overlapping zones. And then we're looking for evidence. Now, if you had seen other videos, we talked about buyers are jammed, sellers are jammed, right? This is where you can see this, they're jammed on the top. All right, so this creates a lowest 5-6 tick stop loss area. So market opened here, it did all this. This is 7-minute chart. Why do we use 7-minute chart? Because big professionals in the Wall Street do that. That's all there is, nothing else. You can break it down to 15 ticks, Ranko, whatever gimmicks you'll enjoy, but the fundamental is looking at the structure, what has happened is the key. And there's a lot of patterns like these you need to look at. So anyway, this is it. So this was market opened here, did all this work, closed here, opened here, retested this level. And this is your shorting point. We already had the context on the second screen that we are going to do it. Energy is coming, right? Energy is coming. This is happening. All this is all coming together. And this is what it takes to just have 2 screens or 3 screens, whatever it takes to just align yourself with the natural phenomena and the direction and the bias and the energy and the execution, classic execution right here. Now, Ninja has a lot of people building this, right? They're trying to automate this. But you understand the logic. There's a big pressure of buyers. Delta is positive. That means this bar was won by aggressive buyers hitting the ask and lifting the value, and they lifted to the top part of it. Because we are in the right context of reversal and direction and the bias and the energy, and that's why they stopped here. They could have gone up, right? So you need to know where they are going. Why are they going where they are going? And then only these things are really valuable for you to make a lot of money. So that is one thing to look at for sure. So I think we covered pretty much angular pivots based on pinning them to the energy pivots for that day. We talked about this is static, going on for 10 years, it will never change, right? This is all energy superimposed by the laws of nature and the squaring principles on ES market. This is just helping us. If I miss this trade, I got a stopped out first, then it went to this one, and now I'm worried about it. I didn't take it, and I want to look for really another confirmation, and now this time it broke, right? And always gives you a chance. Market is rotating. Algo boxes are not posted here, but you can look at those. We have videos for that as well, but it came back to the tick to this area, right? Only in the context of the bias, and energy is getting unleashed. At 1403, so let's go back to 1403, somewhere here, right? So you have these 7-minute bars, you have this seller block right there, continuous seller, right? So one of the pattern is 3 aggressive imbalance selling block. Here we have a bunch of them, right? So there we go. So it came back to, when we showed in the Ranko, it came back here. They are like one. Now also there are 2 patterns, 3 patterns you need to understand. One is continuous aggressive blocks, sell, 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 right? Sellers are aggressively hitting the bid, aggression and aggression, overlapping aggression. So let's mark this overlapping aggression. This is my context, and this is where Ranko is also there, right? So you can just train your brain quickly. This happened, and I'm already looking for the short. If you are still scared, you want to, okay, I want to see a delta, that this is a net delta negative. Market came back and gave you another chance. Right? This is happening inside the bar, but look at the value. The T is on the top. So this is your stop loss here, stop loss is here. This is the only way you can get to 4 or 5 tick stop loss to met 1 to 1, 1 to 5, 1 to 3, 1 to 4. And this is where the power of energy lines, you can just see. They can just, if I am going to go short right here, I can minimize the stop loss right there. These are the flux lines of energy, and they have been manipulated by a lot of things. So my stop loss is here. If I'm taking this one, I have confluence this guy and this guy. My stop loss is initially here. So you have to have a dynamic stop loss. Here, dynamic stop loss was, if you just want only 4 tick stop loss, and you have to wait. You have to probably need a lot of practice, right? And then you have to see, you have to make it happen like that. But ultimately, idea is, if I'm here, my loss is only few points. Here, loss is a little bit, 4 points loss here, 2 point stop loss here. But dynamically, it is telling us what's happening. So this is, I think, a couple of ideas. You just don't say, oh, this is green, let me just go. It may work one day, it will work most of the time, but sometimes it doesn't, because it is flipping the trend. When the trend is flipping in those situational areas, so here it is green, is worked out as well. It printed red, short worked out. I'm talking about Rankos at this point. Here also it worked out like this, right? It works out. Rankos are designed for that. So here took it out, came back to the tick to retest it, right? So Rankos are designed for that. Now this is what I was talking about. This one worked out nicely. Then you wanted this to work out precisely as well. Then what happened? It did not, right? Stopped out. And then it came back again. So everything has to be in context. So once this is, I think, the classic case of everything is right there, stop loss perfectly done, everything is done, and market is going to keep vibrating to these energy levels rest of your life and your kids and grandkids life, right? So this is again same thing. right? You should understand what's going on here in the context. If you blindly take this, stop loss, right? Same thing here, stop loss. Well, obviously this is end of the day, but still, again stop loss, right? So you cannot just trade these colors and say, I'm good to go. It doesn't work that way. You want it to work this way. You want it to work this way. You want it to work this way nicely, right? It does, but here also you expect some failures, because when the trend is shifting and they're trying to make the market move in one direction or the other, market came down. These are my box areas, right? So that is how it is. So you have to put the right context, the right direction, and this is where energy is also coming and direction is coming, and this is where we have to use it in the context of retest. And if you are in the trade and it's working out for you, stay in the trade. When things are flipping, this is where the challenges come from, and this is where you need to know where are those secret spots. Why did market turn here? Why did market turn here? Do we know in advance? The answer is yes. They will go here, we know that. They will go here, we know that. And that is part of the level 1 program. It has 10 different things. It takes at least 3 to 4 months on a weekly sessions to really grasp really what's going on in the world which moves the market. Thank you so much, and we'll continue our progression end of the month starting November. Thank you.